Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies SOFI stock, and we're going to talk about why the share price is set to plummet here either this week or next week, just to potentially 10x in the future. So in the short term, the stock price is going to suffer because of various news updates that are coming out about the student loan moratorium, which we will talk about in this video, as well as other news updates, and then in the future, we have fantastic catalysts that could cause the stock price to literally 10x. So for more videos on Sofi Technologies, price targets, and news updates, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's just jump right into today's stories. Sofi Technologies, if you didn't know, is a fintech company or a financial technology company that offers their consumers an all-in-one inclusive digital app which gives them access to various financial products and financial services. They basically operate as a digital bank, and they are extremely disruptive and innovative in the overall banking space. Right now, the Sofi shares trade for $6.55 per share. However, stock professionals think that the company is somewhat undervalued right now because they believe the company should be worth anywhere between $7 and $11 over the next 12 months. Currently, the stock has a very high short interest, or relatively high short interest, of around 16.66%, with their revenue year-over-year growth coming in at 52.72%, which is absolutely staggering. Anytime we can identify a company that is growing at or around a 30% CAGR, or compounding annual growth rate, year over year, that company is rapidly innovating, expanding, and growing their overall revenues, which is going to reflect very positively on their overall stock price and hopefully help them reach profitability. But we talked about Sofi Technologies' profitability and the current projections and forecasts for that in the last video. But in this video, I really want to talk about the student loan moratorium, the upcoming problems Sofi Technologies is about to face, which is going to cause their stock price to crash to where their management may implement a reverse stock split if it falls down to around $3 to $4, and then potentially in the future, according to one article that we're going to analyze, the company could potentially 10x, but I'll give my thoughts on that article when we get to it. The first thing I want to point out in regards to their news updates is that on Wednesday, Bloomberg actually reported a large chunk of around 29.95 million Sofi Technologies shares that were unregistered actually was offered overnight through JP Morgan and Goldman Sachs. And as of right now, we don't know the names of this seller or multiple sellers that ended up doing this. So that is already very ambiguous, where we really don't know what's going on here. But at the time of this selling, the price was around $6.10. So it seems that this seller or multiple sellers are selling because they understand that the stock price is about to drop. And that's what we are going to be talking about in this video. So why is the stock price potentially going to drop either this week or next week? So the main reason for this is because the Biden administration is set to unveil a plan to either forgive $10,000 worth of student loans for borrowers who make less than $125,000 per year, or potentially they could forgive up to $20,000 worth of student loan debt in particular cases. And the reason why this is bad for Sofi Technologies is because Sofi makes the majority of the revenue from their lending business, and they actually started as a company doing student loan refinances to where they still make a lot of their revenue from a student loan refinancing. So as time goes on, hopefully they can continuously diversify their overall revenue branches, and with student loan forgiveness coming out, or potentially a student loan moratorium extension, which I am very confident will happen, this does not look good for Sofi stock in the short term, especially because we have this block of unregistered shares being sold by either one or multiple sellers right before a huge announcement that could negatively affect Sofi Technologies by the Biden administration. So right now, that is something to definitely keep your eye on. So in the short term, why has Sofi stock actually been rising recently? If you paid attention over the last few days, we can actually see that the stock price actually surged somewhat, around 5 to 10%. And I'm sure multiple investors are wondering why that surge is happening. Well, sometimes before negative catalysts, we can actually see an increase in the stock price right before a major dip. And I personally think that's going to happen, at least for the short term. And again, the main reason for this is the connection between the student loan moratorium and Sofi Technologies' business model. As of right now, we have no official details on whether or not the Biden administration will be extending the student loan moratorium. However, Bloomberg is very confident that the student loan moratorium will be extended by at least 4 months until around either December 31st or January 31st. Now, for me personally, I think January 31st is going to be the actual date of the extension. But keep in mind, we don't have any official statement statements from the Biden administration as of right now. But in my opinion, it's extremely likely that the student loan moratorium will be extended on top of potentially $10,000 worth of student loan forgiveness. Now, I think that the student loan forgiveness program will actually not go through. I don't think that $10,000 worth of student loan debt per individual will be excluded or forgiven, because I think that would be extremely unfair for the responsible people and investors who are paying back their student loans and have already refinanced their student loans with a third party or another company to get their interest rates low. So from a political standpoint, I understand how he wants to do this to potentially get more votes. However, the people who are most likely voting are the people who are responsible, who have already refinanced their student loans, and this would probably help out people who haven't refinanced their student loans or haven't actually looked ahead to be financially independent or financially responsible in this particular regard. But hey, if he's willing to clear $10,000 worth of debt per individual, I think overall that could be a good thing on an individual basis, but I don't think it's going to help him as much as he thinks it's going to help him. What would help him more would be the extension of the student loan moratorium, which I think will happen. So I agree with Bloomberg and the various articles that we've analyzed around this. But what does this mean for the SoFi stock price? It means that the stock price will most likely drop after the student loan moratorium is extended, because if the student loan moratorium wasn't extended, it would actually be a very positive catalyst for SoFi investors, because we have to keep in mind that a significant portion of their overall lending business still involves student loan refinancing, which was the company's original focus when they became a company, and this is still a major growth driver. So clearly we would want that growth driver to continue to push revenues higher, but in the meantime, I think SoFi Technologies has done a phenomenal job of still giving their investors and as a company delivering very impressive overall revenues. It doesn't really matter how we look at it. This just means that this very positive catalyst of the student loan moratorium eventually ending just gets pushed into the beginning of 2023. And we also have to keep in mind that management already has projections that incorporate an extension of the student loan moratorium at least until the beginning of 2023. So even though this is going to cause the stock price to pull back, it honestly shouldn't. Investors are just going to think that this is really bad, so they're going to liquidate their shares, which is going to cause the SoFi stock price to drop. However, I think that's absolutely ridiculous, especially based off of their financials and forecasts, which have already anticipated the student loan moratorium being extended. So even if it was extended, it really shouldn't bother anyone and the stock price should stay relatively the same, but I highly doubt that's going to happen just due to market psychology, where a group of people sell based off of short-term news and fear and FUD, and as the stock price is dropping, it encourages other people to also liquidate their shares because they don't want to have any losses. These are clearly not investors who want to buy and hold for the long term for the potential 10x opportunity in this particular company. And they're also not thinking eventually when the student loan moratorium is going to come back around and will eventually end, it's going to cause a surge in overall refinances for SoFi Technologies and thus increase their overall revenues year over year from that point onward. So if anything, this is only going to be a temporary setback. However, the problem is that if the student loan moratorium is extended and the stock price drops to around $3 to $4 or even $5 potentially, we could see management of SoFi Technologies implement that reverse stock split, which could definitely rub the majority of investors the wrong way. Even though the share price would be worth around $30, $40, or $50 per share, it actually didn't create stock price appreciation for their investors. So that's going to look really bad. And if the stock price is trading at that high, it just allows it more room to fall back down. With that being said, I am still very positive and bullish about the long-term aspects of SoFi Technologies, such as the company being profitable on a full year 2024 GAAP basis, which is going to be amazing. So why do some authors think that the stock price is going to absolutely plummet in the short term just to 10x in the long term? Well, actually, let's look at that right now. So this article that we are about to analyze says that these two SPACs could have 10x potential, and of course, he's going to start off talking about SoFi Technologies. And if you didn't know, a SPAC is a special purpose acquisition company that basically acts as a shell company or a blank check company to where a private company joins that company and then that private company gets to become a public company through that SPAC shell or blank check company. And honestly, I don't really have a lot of problem with SPACs. However, in 2022, due to the major amounts of inflation, fears of a recession, which technically we are in right now, most SPAC companies and aggressive growth technology companies has performed very poorly because of investors' fear. However, like I said earlier, some investors still thinks that SoFi Technologies is an excellent long-term buying opportunity opportunity for patient investors, and potentially the stock price could 10x over the long term. Sofi Technologies literally is a banking disruptor. They're extremely innovative, and I think that this company is going to make plenty of profits over the long term, which is why I personally am willing to hold for the next 5 to 10 years. And even if this company doesn't work out, it's no skin off my back because I only have a portfolio allocation and a portfolio weight allocation to this company of around 4%. So if my portfolio is $100,000, I only have around $4,000 invested into this company because my portfolio is made up of a plethora of fantastic companies, and I don't like putting all of my eggs in one basket. I also want to point out that as inflation increases, the Fed, or the Federal Reserve, will continue to increase the overall prime rate and the interest rates, which will reflect very negatively in a multitude of companies that have a lot of debt on hand, to where Sofi Technologies doesn't really have a lot of debt. They have just under $4 billion worth of debt, but I want to hone in on banking companies are actually the best companies to buy during high inflation or a high interest rate economy right now, because these banks will adjust their interest rates accordingly on their various loans, which could definitely decrease overall consumer demand of loans, but that will slightly be offset by the money that they are bringing in from these higher loan rates. And with Sofi Technologies being their own bank and offering extremely competitive interest rates, the company continuously grows their overall member base, which now sits at around 4.33 million members, which is an increase of around 69% year over year. Also, I'd like to point out that their financial services products are also taking off, to where their Sofi Money platform and their Sofi Invest platforms are doing extremely well. So in the long term, this company still looks like a good buying opportunity, but in the meantime, because of a short-term pullback in the stock price, which I am predicting, I think this company is a holding opportunity right now, at least for the next 4 to 5 months. The article also highlights another company called Nextdoor, ticker symbol KIND, which has a market cap of around $127 billion, so it's relatively small right now. In essence, this is a social media company which trades substantially below their peers. Now, disclaimer, I do not own any Nextdoor stock as of right now. I only own some Sofi shares. Nextdoor essentially is basically a social media platform for neighborhoods, where multiple neighbors get to communicate with each other, various businesses can make posts, and it allows people to buy and sell couches, tools, or anything like that. It basically just makes the overall neighborhoods and communities more connected. According to their website, I'm going to quote, it says, "It's where communities come together to greet newcomers, exchange recommendations, and read the latest local news. Where neighbors support local businesses and get updates from public agencies. Where neighbors borrow tools and sell couches. It's how to get the most out of everything nearby. Welcome, neighbor." So basically, like I said earlier, it's just a social media platform for your particular neighborhood, which I think is a pretty cool concept, but I don't really know how this is going to become a large cap company. However, I definitely could be wrong. I am very speculative about this particular company, and I really don't know if it's going to be a good long-term buying opportunity or not, so I have not bought into this company. Right now, it's trading at around 1/10 of Pinterest's current valuation, which is another social media company, and the KIND stock has fallen around 65% since its overall original SPAC valuation. Right now, the company trades at around $3.27, while investors who are professionals and experts in this particular industry think that the company is worth anywhere between $2.50 and $6 over the next year. The average revenue that it brings in per customer is very small compared to other social media platforms, particularly in the United States. However, their overall user and customer base is growing pretty fast. Right now, there's around 37 million weekly active users, which represents an increase in a growth rate of 26% year over year. The company is also welcoming to advertisers who place ads on their social media platform, which is how Nextdoor generates a lot of their revenues. And the reason why this company is friendly for advertisers is because they offer lower costs per visit, so it's cheaper for advertisers to advertise and market on their platform than it is other social media platforms. And I think that is a decent competitive advantage. However, I do think that they need to grow their customer base by a lot more. But I would love to hear your thoughts down below. Remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.